All right. So in this video, I'm going to be going over the weekly power of three, how I use this within my trading, how I use it each week, and how I use it each day to gauge my daily bias. Because based on what we've done within the weekly range, it can tell you a lot on what to expect each day. So in the Discord, going into the week, I gave my weekly bias. I wanted to see a pullback to specifically this 4-hour FVG at equilibrium. So here was equilibrium. Here is that 4-hour FVG. So I'm going to be going over why I was fine with us coming up short of it here and called for the low of the week to form here. So going into the week, we had the bearish breaker I talked about here. Respected very nicely, gave us the move lower, which also set up very nicely for a clear read for what was going to happen here going into the end of the week, of why we could have expected this distribution back to the highs and why it was an aggressive move. Okay, so here, let's pull up the Dow because this is key. So like I said, we had this clear SMT down here at the lows. As you can see, the Dow made this higher low as the NASDAQ made a lower low. Okay, so we had that first SMT here that provided this first expansion, which was to 2 to 2.5 standard deviations. So we were expecting our reaccumulation for redistribution. So measuring here on the Dow from the same swing points, the Dow reached equilibrium. It reached into discount here. And also, look at the candles here. The Dow started to make higher lows here. And you can see on the NASDAQ, we were making lower lows. So right there, we have our SMT. Okay, so we have our SMT aligning here. The Dow is already reaching into discount. And the NASDAQ, it had a 4-hour FVG it was respecting here, as well as this is what really got it for me. We were taking out this 1-hour internal liquidity and this 1-hour FVG here that I had outlined was respected very nicely because 1-hour PD array, 5-minute market maker model. And you can see how well the 5-minute respected and then continued higher as data accelerated us. But we'll get into the lower time frames here soon. Let's stay on the 1-hour for now. So just like the 4-hour power of three video I showed, we divided it up into 4 different quarters per se. So here on the weekly range, it's pretty much the same thing, except we had 2 days of clear accumulation here. Typically, a lot of times you'll see Monday be the accumulation and you can see lower high of the week formed on Tuesday. But Tuesday and Thursday are high probability days to see lower high of the week formed, especially if the economic calendar and data is lining up with it. That can tell you a lot. Because going into the week, I talked about Thursday could be a good reversal point. So Monday, we had a clear accumulation here. We did not take out this high, so we are leaving equal highs right there above the breaker. So then here, we get another move up, and we formed another failed swing high here on Tuesday. Get the move down, came back up. Look at that, another failed swing high, and then they took it back lower. So the whole week so far, the only people that have been making money really is shorts. We just keep going right back down, right back down. We're just taking sell side, sell side, sell side. We're not taking any buy side. So accumulation, manipulation, and then what do we expect at manipulation? Well, for one, manipulation moves are projectable. So standard deviations, which I'm going to get into in a second whenever we go down to the lower time frames, right down here was 4 standard deviations. So we were capping the low of the weekly range, and we formed SMT, and we're hitting our arrays, our points of interest, and SMT is aligning. SMT is confirming your trade idea. And then we have data this morning. So now we're going to start to go down to the lower time frames here because we saw our clear accumulation. So we have our weekly high here, as well as look at what day the high of the week was formed on so far, Monday. If you go back and study price, Monday is not a high probability day for us to form the higher low of the week. So I was not expecting this to be a valid high of the week. All right. So now we can get rid of the Dow here. So now let's go down to the 5-minute time frame here. So manipulation moves are projectable, as well as here. Before I do this, let me go back to the weekly chart real quick so I can mark out the open of the weekly candle. So this is exactly what we did on the 4-hour. So you mark out the open of the weekly candle. So here, I'll go back down to the 15-minute time frame to fix this line. Yeah, I knew it was going to be all the way over here. All right, so we have our weekly open, okay? So we have our weekly open here. So I talk about the true week open as well, which is 6 p.m. on Monday. So we saw Tuesday be the real lower time frame manipulation for the bigger picture manipulation. So once you can understand that of how the lower time frame plays into the higher time frame, a light bulb will go off. So here we see the high of Tuesday, this swing right here. Here's an institutional swing point to project off of. 2 to 2.5, what do you know? Clear reaccumulation. And what do we leave? Equal highs. So why are we expecting moves to end up coming back here once we go lower? Equal highs. Standard deviations are telling us. So we come back down and look at this. Look where the turtle soup occurs. 4 standard deviations. Like we said, at 4 standard deviations, you can likely see the range cap, and you can expect things like turtle soups, SMT for reversal. And so after that, we see SMT, and then what do we have this morning? We had data at 8:30. So SMT leads to expansion. So when we are going into data, we know data can only do one of 2 things. Data can only be manipulation or distribution. All right. So we saw the manipulation before data came out. We saw this move straight down that took out sell side. We're leaving SMT. We're hitting 4 standard deviations where we're likely to cap the range, which is the weekly range, the low of the week, because all of this stuff is projectable. The algorithm already knows what the high and low of the week is going to be before the week already happens. It already knows what it's going to be next week. It knows what it's going to be 5 weeks from now. Okay? You get the point. As well as, look at this. This is what really told the story for that data play that I took this morning. Midnight price. Straight away from midnight price. We did not see any moves above it. So what is this move below it? Manipulation. Why do we expect that? Because based on statistics, go back and study how often we just move straight away from midnight price and never refer back to it. It just does not happen like that, especially when we're expecting the low of the week to be forming down here because we have SMT. So then when we already see the manipulation taking place going into data, we can expect it to be distribution higher. And look at that. Right before the data, they're taking out another swing low. So what is that? They're taking out a swing low here because we started the buy side of the curve. What are moves below old lows on the buy side of the curve? False market structure shifts and or turtle soups. All right. And you can see false shift and turtle soup, and then rallied with data. And then what do you know? They took it to buy side liquidity. But also, let's go down here to the 5 minute. So everything is projectable from high to the low of the week. So look at this, 2 to 2.5 standard deviations from the 5 minute swing point right there. Clear reaccumulation. And where does the reaccumulation go to? This is not random at all. Midnight price, as well as well, here I had it projected with the 1 minute here because this was the high, because here we did not make that higher high. And you can see here 2 to 2.5, we got this clear reaccumulation, and then came down to 3.5 to 4, where what happens? Where we're likely to cap the range. And that's exactly what we did right at midnight price. At what time too? The lunchtime stop rate. On these times that we see these trend days, you are going to see those lunchtime stop rates, and then they continue it back in that direction, right back to the highs. All right. This stuff is not random. As well as, let's go down to the 1 minute here. So this move back lower, what do you know? You can project this as well back to the highs. So look at this. So the all-time highs, sorry, let me go back out to the 1 hour because that's the standard deviation. That's why I was messing up. So right here was the all-time highs. So this was the second draw on liquidity we were wanting to see. So here from the lows, you can see 2 to 2.5 lined up with this buy side perfect. We hit it, got the reaccumulation, and then 3.5 to 4 was lining up perfect with this all-time highs buy side liquidity. So then here, that 1 minute standard deviation projection I just showed you from the reaccumulation, look at where 2 to 2.5 is lining up. It is now lining up here where 3.5 to 4 is lining up from the bigger picture. When stuff like this is lining up, it's not random. And you can see we're reaching that now. All of this stuff is algorithmic. It is all planned in advance. And I hope this video can help open your eye to how the weekly range plays out, because just like I talk about midnight price, the weekly open, the same way I talked about in the 4 hour power of 3 and how you can use the 4 hour open, the weekly open here, we see the accumulation and then we see manipulation below the weekly open. So this is the low of the weekly candle, the wick of the weekly candle being formed. All right. And then they see distribution. And then this is exactly my one shot, one kill model using the weekly open and midnight price here. All right. They see manipulation right back below it for another low risk buy. That is where smart money is buying right there. And then they rally it again. Every real price swing comes from the manipulation of midnight price. And there's other true opens as well, as you can see, for example, the weekly open, as well as we can look here again. I forgot to mention this one, but I did have it on my charts this morning. So let me go down to the 5 minute here on the Dow. So look here on the reaccumulation that the NASDAQ got as well. Why could we have expected this to be a valid low here? We're manipulating back below midnight. We're hitting 3.5 to 4 standard deviations, and we're forming SMT again. SMT. It is so important. I talk about it a lot because it's so important. Right here, look at this. This low here is this low here on the Dow. The Dow made a lower low. The NASDAQ made a higher low. Right there, everything is lining up for the reversal again. So very beautiful price action today. So I hope this video helps, because each day you can use this, because if you're seeing our accumulation, you know you can expect manipulation at the low of the weekly range, especially when we're leaving failed swing highs like this, when we're not taking buy side liquidity, and when the high of the week was on Monday. All right. So I'm going to leave it with that, as well as the DXY I talked about. I wanted to see it move lower, and it did whenever it got under the weekly FVG. So that played out very nice as well, because it got that first rally whenever the NASDAQ came lower that I wanted to see to that first buy side target that I talked about. You know what? I'll just show the chart real quick. So right here, I was talking about this buy side liquidity, because this was the top of this range here where we had this trend line liquidity, and you can see it got the rally up, took out the trend line liquidity, and then it died. It went right back down for indexes to rally. All right, so on that, I'm going to be leaving it. I hope this video helps, and I hope to see people using this within their analysis. Have a good one.